Good afternoon from TFNN. Welcome to the November 21st fantastic Friday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he's on his way back from the West Coast. Hope everybody out there is having a great day. And let's make sure that you and I, that we do everything in our power to have just simply a fabulous and fantastic weekend. Right now we got the Dow up 84 points. S&P is up 9. Composite up 11. Russell 2000 up 2.5 points. The DAX finished up 248 points to the north. FTSE was up 71. Gold is up about $9 right now. Silver up 30 cents. Our call-in number is 877-927-6648. I'd be honored to take your call. Internationally, you can reach out to us at 727-445-1044. All right, what are these markets doing? Well, can you say A to B equals C to D? They're all over the place. So let me give you a feel for first what's going on. We're going to go take a look at the intraday charts out here. The larger A to B equals C to D pattern. We'll take a look at that as well, just so you can take a look at exactly what's going on in the marketplace. I'm going to switch over to the futures market. That way we don't have to worry about filling in for slots of time. You know, you don't have to trade the futures, but you absolutely do want to get access to them so you can understand what's going on from a price standpoint. Let's start off with the big dog out here, the NASDAQ. If we take a look at the NASDAQ, this is a 30-minute chart, by the way, that we're looking at on my screen out here. Pull this back. Am I in the right time? Yeah, I'm in the right spot out here. Let me pull this back a little bit further. Come on, work with me. There we go. Okay. So if we take a look at the NASDAQ, we take a look at the A to B equals C to D pattern out here. This one has one that starts, oh, come on. Come on back here. This starts, I'm having trouble there. Let's go take a look at, my apologies, let's go take a look at the ES Mini. I'll go back to the NASDAQ. The ES Mini, so take a look at the S&P futures out here. If we take a look at the low that it was about 9:30 in the evening, November the 16th, or November 21st, that's the point that you would use for an A point of an A to B equals C to D to the upside. Market goes ahead, makes a high out here at 2,054, does it about between 3 and 3:30 in the afternoon on November the 18th, makes about a 0.618 retracement. The actual number on my screen says 65%. That's close enough for us. Then we have the explosion as we were coming into that 9:30 to 10 a.m. session. That was on November 20th. That was a couple of days ago. No, that was yesterday, by the way. What does the market do? Market moves strong off that C to D leg out here. Today stops right at the 1 to 1.272 A to B equals C to D. Now, as it was doing that, let's take a look at it like this. When it gets to the 1 to 1 A to B equals C to D out here, is there any sign at all of any kind of bears in place? And the answer to that question is absolutely not. Now, tomorrow, during my workshop, during the next 7 weeks, where I'm going to be showing you all the little intricacies, all of the tools that you need to understand these patterns, when price is likely to stop in an area. If we take a look at the next level, because there's always next levels out here, and inside the S&P futures, on its 30-minute chart out here, there was no way that price was stopping at that 1-to-1 level. Of course, it could have, but there was certainly no signal. A little different story as price gets to the price point of 2,072 out here. I mean, that would be your price projection. Now, you get to exactly 2,071.75 at the 9:30 session. At the 9:30 to 10 o'clock session, as I was going off of the air out here, what we saw was price get up to a high of 2,072.25. Got to love that. But here's the thing, and here's the interesting thing. All the way up here, during the C to D leg, the first reversal signal that you actually see is right here, and that's at that session between 9:30 and 10 a.m. Number one, we can also see that the market is extremely, overbought. If you take a look at the indicator down on the very bottom of my screen out here, that relative strength reading was 90. Now, it's just like a rubber band that stretches. It can only stretch so far before it snaps back. In this case here, you don't know how far, right? No, you actually do, because the bulls and bears, they absolutely can't hide from you. That's why Japanese candlestick charting is so important. Unfortunately, you can't use candlestick charting on its own, nor can you just use pattern recognition on its own. If you don't marry the two, you're going to have a really bad marriage. And who wants that out there? I mean, that's a really bad relationship. That's the thing that the books don't tell you. That's the thing that most traders overlook. When I say most traders, about 99% of the traders out there. And you don't want to overlook that. That's one of the things that we will be focusing so much time on in my workshop out there. That is what I identified, that everybody that taught me about these, all the books that I read about this stuff, didn't recognize. Steve-O recognized it, though. We had a key reversal session out here as it makes that 1 to 1.272 A to B equals CD. Is it a coincidence that it stops there and then gives us a signal? So now what we've seen is a retracement and a pullback. So let's get rid of the A to B equals CD just to measure what's taken place here thus far, because the retracement, not that big of a deal, right? If we go from the low, this is of the B to C leg. I'm not even going of the A to D leg. I'm just simply taking a look at the last leg up. If we go from that low to the high out here that came in at between 9:30 and 10 at that 272, we're really just below a 0.382 retracement. Now, the market could be very well setting up a small A to B equals CD to the downside. I don't know that at this stage. Now, I'm going to go through the reasons why. Yes, the Santa Claus rally, Steve-O the bull, sometimes in a China stop, that hasn't changed at all. But there are some signals out here that if we don't pay attention to, well, we would be silly. We don't want to do that. What we never want to do is get our mind so locked in to whatever direction is we believe the market is going in that we don't take a look at the other side of the trade. We must always look at the other side of the trade and see if there's anything that's out there. And there are some things that are out there. If we take a look at the Dow, just an example, so you can just really see the unison, the unity here. The Dow formed an A to B equals C to the upside. Now the Dow, stronger than the ES Mini. Why? Because it made a 1 to 1.618 A to B equals CD. What did the Dow do? Really the exact same pattern. Has this got to the 1-to-1 level, any reversal signal? No. In fact, if anything, there was a continuation pattern. Most candlesticks, well, you've got candlesticks, you can put them in three categories. You have those that are truly reversals that you need to know. You've got those that are bullish and bearish that absolutely mean nothing other than to just fill up stuff in your mind out there. But they basically mean nothing. They're just kind of interesting. And then you have two candlesticks that are actually continuation patterns out here. You've got one that's called the Rising 3. Well, that's exactly what took place here at that trading session at 5:30 this morning, after the between 5:30 and 6, after the Central Bank of Japan said they were going to go ahead and lower interest rates. And that put some real energy into the market. Hey, look, when that price level was hit, you came into a nice wide-ranging bar. You had a continuation pattern out here. There was no way the price was stopping there. Where was price headed to next? To the next level. At a minimum, to the next level. It could have gone on to the 1 to 2 A to B equals CD, but once it got up to this 17,863, went ahead and formed what? Went ahead and formed a key reversal session. These things work. Now, key reversal session versus a reversal day, two totally different things out there. In order to have a key reversal session, you must have the following three conditions present. You must be in an extended condition. So something that's happening in the middle of a move, just called a reversal, just called it's not a key reversal, it's just a reversal day, just an outside day. A lot of times people get this stuff really confused. And if you get it confused, you might trade off of it and you're going to totally blow it. You're not going to take the information that the market is providing to you. You've got to get these candlestick signals correct out here, just like you got to get the patterns correct. In this case here, the market's pulled back. If we take a look at what the market has done, where it's pulled back to, let's do the same thing. Let's take a look at the retracement of this C to D leg from that little doji candle up here to this key reversal. Only a 0.382 retracement. At this stage, not that big of a deal on the retracement out here. Could be setting up the next A to B equals C to the upside. Or to the downside. Again, what we want to do is kind of put a couple of different things, not kind of, we want to put a couple of different things together. Now, Russell 2000 has simply just been trading sideways. Oh, I got the 240-minute chart out here, but let's put this on a 30-minute time frame. In the case of Russell 2000, and if we take a look at the Russell, there actually is no A to B equals CD pattern to the upside out here. That's got to make you say, something to think about. There really was no pattern set up for that. So what did the Russell 2000 do? Russell 2000 did what it was supposed to do. It got back to its swing points. Whenever you're trading, whatever it is you're trading, and you're trying to identify where is price going to head to, you better keep your eye on the major swing point. Major swing point, what is it? It's a major intersection where price begins to reverse directions. It's just like driving a car. You're going to drive home tonight, maybe you're listening to the radio right now, and you're going to come to a major intersection out there, maybe one with a stoplight, maybe one with a U-turn out there. So you've got major intersections, and then you've got all those cross streets, into subdivisions and so forth. Those are swing points. Those are roads that you could turn down. These are these little junior ones that we see on the way down here. Now, when we get back from this first break, we're going to take a look at the IWM, because from weakness we get strength, and from weakness we see weakness out here, and we want to take a look at the IWM. If we finish out the day here, IWM's trading at 116.61. Well, I'll tell you what that means. This is Steve Rhodes. This is TFNN. I hope everybody's having a great Friday. Stay warm out there. I think the warm is coming down, right? I think it's going to be in the 70s and 75 and maybe even 80 down here in Florida. Come visit us if you're up in Buffalo. If you can get out of that snow. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 83 points, S&P up 9. I'm Steve Rhodes filling in for Tom for the afternoon out here. He's on his way back from the West Coast. And I mentioned the Bank of Japan cutting rates. It's the Bank of China that cut the rates out there. I don't think the Bank of Japan can cut their rates anymore. They can charge you to go ahead and hold on to deposits out there. Now, I mentioned the IWM, so there's a couple things that I want to be able to walk you through here just to get an idea of what's going on, and I get some of the messages of the markets here. So we take this is the IWM, so this is Russell 2000 out here. Let me go ahead and expand this on the screen. Now, one of the things that you're going to notice, or you should notice out here, is let me get rid of the retracement level. We take a look at this. Pretty unusual. This is a weekly chart that we're looking at. So for the last 3 weeks, remember the market made its high, not to make its high, but we had that big, we had courtesy of Japan, we had the markets move higher into the week ended October 31st. That's in essence what it is that we're looking at here, this wide-ranging bar out here inside the IW. Look at the last 3 weeks out here. Last 3 weeks. Doji candles inside of the Russell 2000 on a weekly basis. Folks, that's really hard to do. Now, what does a doji mean? Well, doji in Stevie's window really only means something at resistance. So where's resistance inside of the IWM? At this stage, you really could identify 3 levels of resistance possible. Okay, one, it should come all the way back to the left. You've got the swing point that was formed on March 3rd, 2014. Now, that swing point has 270 million shares. As price came up into that level on October 27th, the weekend of October 20th, the weekend ended November 2nd out there, because just to be off by a few days out here. What the during that week, October 31st, during October 30th, right? 31st. During that week, price came up with 295 million shares out there. So it was moving into that swing point with volume. And then all of a sudden, things have died. Now, there's another swing point for us to look at, and that's the most recent one. That's the weekend of June 30th. That swing has 146 million shares. 146 couldn't bust out 270. And then as the dojis, which when they're coming in from a resistance standpoint, when they're coming in a resistance, they have a ton of meaning. Then we got 168 million. And that was the week ended, I guess that's November 6th out here. So you went 220, you went 146, and then you went to 168. Last week, 135. Now, this week, we've got volume accelerating. So volume is really accelerating. You're already inside this swing point all the way back here from March 3rd. You're accelerating coming into this swing point here at the end of June out here. And you're going to close below that level. It says price will eventually be back there. But you got 3 dojis, which says that the market is tired on a weekly basis, whether you're coming in with volume or not. It means that you got to pay attention to this because this is the weak link out here. Now, why are we not at our session highs where the DAX was? If we take a look at the DAX here real quickly and the FTSE, if we look at what they did, the DAX was up a total of 2.6% out there. So pretty healthy day inside the DAX. Closed up 248 points. It closed at its session highs. If we take a look at the FTSE up 72 points. Not at its session highs, but pretty darn close to it. So what's the difference about the U.S. market versus the celebration that went on over in Europe? Well, the difference is the way that our market celebrates with regard to the euro-Japanese yen. As you know, if you listen to any of my shows, you know that I harp on this currency pair because it is so significant out here. Now, this currency pair, and this is kind of interesting, it has resist. Now, this currency pair tracks U.S. market better than any other currency pair out there. Now, on the weekly chart, if we take a look at its swing point out here, natural area of resistance, that swing point was from the week ended, assuming this is correct, December 23rd, 2013 out here. Let's take a look at the price point, 145.68. 145.68, you're 145.90 as we speak right now. Now, there's a 15-minute delay on this currency pair out here. So well off its session highs. Now, there's a couple of different patterns that we're looking at inside of this. If we pull this all the way back, we try to do this from 1979. What the Euro-Japanese yen has done that we want to pay attention to, you know as well as anybody that when you break a trend line out here, you like to see price come back and test it. This is the trend line that takes you back into 1979. The top of that session is what you would use as to begin the trend line. The next area is going to be the top of the July 28, 2008 level out here. What price actually did last week was it broke through that level. Now, if we see price by the end of tonight's trading session close below 145.68, we will have seen resistance on the weekly chart at horizontal resistance. What does that mean? That means, and that's why, if this currency pair were up at its highs, our markets would also be at their highs out here. But this thing, if we take a look at the intraday chart on this, let's take a look at this. Let's take a look at a 120-minute time frame on this currency pair out here. And what you're going to see is it started to sell off out here at about 2 o'clock this morning. So this started selling off. What kind of candle was out there on this currency pair? You also saw that key reversal session out here. Remember, we were looking at the intraday charts, the 30-minute charts in the Dow, 30-minute charts inside of the ES Mini out here. Remember, I said in order to truly be a key reversal, you've got to have, well, I didn't tell you the three things today. Number one, you got to be in extending condition. Number two, the candle's got to be greater than, it's got to be both greater than and less than. You have to exceed the prior candle's high and low, and you need to close in the opposite direction. Just 1 penny, 1 tick. That's all that you need. And that's exactly what we had inside the Euro-Japanese yen at about 2 o'clock this morning. And even as I featured in my newsletter, said the thing that is a disconnect out here, we had a couple of disconnects. Number one, we had the Euro-Japanese yen start trading down. And when it trades down and our markets are going higher, it's just one of those things that say, oh, really? You don't want to see that happen. You want to see everything in alignment. You want to see the stars in alignment out there. We didn't have that. This is the reason that the markets had pulled back into it, because they have lost the fuel. This is the real fuel. Fuel is nothing more than dólares. It's dollars. And in this case here, the dollars that impact our market more than anything else, it's the euro-yen out there. And this thing has been backing up. Now, has it backed off so substantially? When you take a look at 145.68 level, you can see we've got it's become a resting place. Old resistance becomes support. Now, speaking of stars out there, yesterday had a caller asking about the Bradley model. So let me put the Bradley model up on my screen. Today is a Bradley turn date out here, and this is the chart of the this is the daily chart for the Dow. And if we take a look at the blue line out here is the Bradley model. And the question I think that was posed to me was, hey, it's a Bradley model. You know, you're so bullish. It's not really me that's bullish. It's the charts that are bullish out here. I'm agnostic. I'm just telling you what I read as the charts. And the question was, and my response was, I'm aware of the Bradley model, but I don't see a good trading system here. Now, this is the Bradley model as is. And back in 1946, Donald Bradley, he produced a book called Stock Market Prediction, I believe that it was. And he just simply took a look at a number of different planetary alignments, and he weighted those either positive or negative. And as a result of that, he was able, because you got the planetary alignments, you know exactly what position they're going to be in 300 years from now, 300 years back then, so it becomes very easy to plot all these things. So they either have a positive or a negative. When something is in conjunction, two planets are in conjunction with each other, sometimes then there's a whole nother table to figure out whether it's a positive or negative valency. If I just use the Bradley model as is, just simply post it on the chart out here, and if I were to trade off of this, we would just simply get demolished out here. It has been a horrible tool to be able to use as a trading system. Does that mean that we ignore it when there are turn dates out here? No, we don't ignore it. But to just simply use it right now at this stage, just to give you an idea here, okay, the Bradley model should be turning today. The market should be making lows today according to the Bradley model. Now, if you go read Donald Bradley's book, he doesn't say invert it if this isn't working. Inverting it would be like me telling you to go long something and the trade works the other side and I say, well, it really worked. You just should have gone short. I'm not getting that out there. That's not really how it works. 877-277-6648. This is Steve Rhodes, TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the day out here. Now, during the break, the CFTC releases their commitment to traders data each Friday at 3:30. So it's 3:35 right now. So during that break, I was truly multitasking, trying to update a couple of charts. I'm not going to actually update the data. I'm not going to. I've got to integrate. I've got a way to where I manually integrate the data into some other charts out here. The first thing that I took a look at was the U.S. dollar index. Now this was through. This is the data through Tuesday afternoon out here. Now I'm going to put this correlation chart on the screen so that you can take a look. The U.S. dollar index has had a huge move today. In fact, first let's take a look at what it's actually done. Right now up 733 ticks out here. This is the 120-minute chart. Let's go take a look at the daily chart. And what I can tell you, and this is where it's going to be really interesting to watch this thing play out. Well, let me put the continuous contract. That'll be a little bit easier. Give me a moment to put that so I've got some data to go ahead and try to correlate it against. So the U.S. dollar index, right now, it's trading out at about 88.39. The swing point that it's dealing with is from, this is a daily chart from back here on November 14th, and that high is at 88.36. So you're pretty darn close to it. Now, with the U.S. dollar index having made just one heck of a move off of these lows out here from May 8th, 2014, I mean, it is a huge move. And what I can tell you is that the presumed smart money out here, big commercial banks and so forth, and even after Super Mario Draghi was on the hill, he's the one that really kind of started things up this morning here, maybe about 3:30 or so, saying that he's going to do all that he can do. The reality, folks, if you go take a look at I did this during the first hour of my show, I believe, this morning. If you go and take a look at the balance sheet of the European Union out there, you can do it. Go take a look at Mario Draghi's, from the time period that he started talking about how he was going to go ahead and increase the balance sheet, like our Fed has done out here. You just go back 2 years ago. The data that's on the website is from September. It's got go back to as far as you want in history, but right now they only have updated it through September 2014 out there. And what I showed you wasn't really what I proved. But he says one thing, but is totally doing another. His balance sheet is smaller now than it was 2 years ago. Okay, but it doesn't really matter. It's really how does the market respond to things. And with the euro moving lower, the U.S. dollar index moves higher because the U.S. dollar index nothing more than a basket of 5 currencies out there. Now, here is the chart for what the commercial traders, the presumed smart money, is doing. They actually moved up to a more net short position from last week. Now, this is only taking a look at the U.S. dollar index. If we go take a look at the actual weighted currencies out there, and we add other currencies other than the euro, the yen, the Canadian dollar, the Japanese yen, the Swiss franc, the Swedish krona, those are the currency pairs that make up this. But we go ahead and we add in the Mexican peso, a couple other currencies there. What I can tell you is large commercials are expecting the U.S. dollar index to get weaker. And I know that is against the grain of what everybody believes out there or thinks out there, but I can only tell you this is what the supposed smart money is doing. I haven't been able to take a look at gold I wasn't able to get to it during the break, but the reality is even if they take their foot off of the gas out here just slightly, and all this is taken a look at as a percentage of open interest, I found that the only real good correlation when you take a look at gold in the commitment of traders data is taking a look at their net short position as a relationship to open interest. That means you're taking, and it's got to be the commercials. So you got to make sure you're choosing the right columns out there. And so it's going to be the short minus longs because they're always net short. So you're evaluating their positions and what they're doing as a result of the short interest out here. So at this stage, even if they've taken their foot off of the pedal just a little bit out here, we're still down at areas where they believe that gold is putting in, or the metals, I should say, because it's also with silver, are putting in a nice bottom out there. So that's what's going on. Maybe during that next break, I'll get a chance in about 6 minutes to go take a look at gold and silver for you. If we take a look at a couple things that are moving in the markets out here, moving to the upside, you've got BlackRock, BLK is the ticker symbol. Let's go take a look at BlackRock out here, gapping up this morning. Let's see what kind of volume we've got, taking out a swing point. The volume inside of BlackRock, well, it would be helpful if I actually showed it on the chart out here. Let me switch over, add volume. Oh, that's interesting. Now I've got to go actually add the study out here. And what the heck happened with the system? Well, we got to do it. We got to go take a look at volume out here. Should be pretty easy. Okay, volume today, 607,000 shares. That's taking out a swing point out here. Looks like the swing was from the trading session of 11.11, only had 323,000 shares. Let's see if we pull this back any further, what BlackRock is doing. So it looks like BlackRock is at all-time highs out here and doing it with some volume out there. So that is now BlackRock, I think I've done the correlation. I think BlackRock it correlates to the S&P pretty closely. In fact, real closely out there. If we take a look at also to the upside this morning or this evening, this afternoon, today, Baidu out here. It's been a long week. Baidu is up by $6.85, up about 3%. Let's see what Baidu is doing. This is a daily chart that we're looking at for Baidu. Volume today, about 3.4 million shares. It's a swing point. Looks like its key reversal session out here has 3.3 million. So you're moving in. It's got a little bit, you're moving into it with a little bit more volume, slightly more volume. We're trading inside the low of that session, which is 242. So Baidu should go make a run for those highs out there, 251.99. Let me see, is there any A to B equals CD patterns out here inside BlackRock? There is. The B point, let's see if this was taken out with volume. That was from July 28th, 229. The volume there was a total of 5.1 million shares, and that was taken out with 10 million shares. So if you want to understand where BlackRock is eventually headed to, we'll go take a look at that A to B, that little lightning bolt pattern out there. And folks, if you want to learn everything that there is to learn about the lightning bolt pattern, then tomorrow morning at 9 o'clock, I am beginning a 7-week trading, mentoring, tutoring, hand-holding course out here. It begins tomorrow from 9 to 12. Now, if you're busy on Saturday, that's okay. What we do here at TFNN is we archive these. So the archive is going to be available on Monday. You're going to have it on your members page through like February. So you've got, and you're going to have access to me by phone, by Skype, by email. And if you want to learn how to master the C to D leg, because that's really what it's all about. It's truly all about buying and selling the D point. Then if you need to master that really in order to be able to master the Gartley buy and sell patterns as well as the butterfly patterns. And those are wonderful patterns to learn. And of course, all of that, in order to master any of that, you need to truly understand which of the 30-plus Japanese candlesticks are the ones that you need to focus on. So whatever level of trading that you are at, this is the type of workshop. Now, the cost is $349, $249. No, $395, $295 if you are a subscriber to Mastering Probability. So it's also, I know we're at that time of the year where you're starting to think about, gifts for everybody and maybe should I or shouldn't I spend money. The reality is we're all going to be sitting down at Thanksgiving, maybe looking through the newspaper to see all of the Black Friday specials. Unfortunately, it's not even, not the stores are even open on Thanksgiving, right? So it's not even like this, which is crazy, insane. There used to be like a couple of days of the year, in fact, whereas like a non-commercial day. That should have been Thanksgiving. The commercial day was the day after. But we're all going to be sitting there with friends and family. People are going to be asking you, hey, hey, Dad, hey, Mom, hey, bro, hey, sis, whatever it might be, Uncle, what is it that you want for the holidays? And you don't want another tie. You don't want another something that, maybe is going to go in a drawer. What kind of use is that? Well, here's the deal. The gift that you should ask them to give you is the gift of being able to attend this workshop or some other workshop. Look, it doesn't matter to me what you attend. There is no better investment than the investment that you can make in yourself. You know that to be true. In the case of Baidu, if you knew the A to B equals CD pattern, if you knew that it took out the B point with volume, if you also understood that price, even though the one-to-one says this is going to 285.06, I would tell you it's not going to 285.06. It's more likely going to 309.74 out there. And that's where Baidu is headed to. That doesn't mean that maybe it doesn't pull back, but Baidu's got a confirmed A to B equals CD. It was taken out with wide price spread, accelerated volume. It's moving higher price. If you really want to understand the nuances of this, and that's really what it's all about. I've taken the best works of H.M. Gartley, the best works of Larry Pesavento, the best works of Steve Nissen, the best works of Tom O'Brien, and just like anybody else, just like any chef, any inventor, anybody, what you do is you always take thank goodness everybody is out there trying to take the best of what somebody else has done and made it better. Just look at the computers that we're using, the computers that we have in our hand. Just take a look at Tiger TV on your handheld in HD. You can see all these charts clearly out here. Simply amazing. And that's what the workshop tomorrow is going to be, simply amazing. So I hope to see you there. If you're sitting on the fence, send me an email. I'll answer whatever question. We can talk by phone. If you're wondering whether it's right for you, Steve at TFNN.com. Be happy to assist you however it is that I possibly can. All right, so now we've got gold. Let's go take a look at gold and some of the mining equities. Gold has really been miraculous today, has it not? I mean, take a look at the U.S. dollar index. U.S. dollar index, okay, which let's take a look at that direct correlation. Let's go find that chart out here that takes a look at gold, the U.S. dollar, and the GDX out here. Or maybe it's the XAU that I've got on my system. Here we go. If we take a look at it, it is typically a directional correlation. The upper portion of my chart, that's the nugget. That's the GDX. The bottom portion is gold. The center portion is gold. The bottom portion is U.S. dollar inverted. When we get back from this break, I'll explain why I've inverted it. The dollar getting stronger. Gold and the GDX moving topside. Very interesting, said Colonel Klink. This is Steve Rhodes with TFNN. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks, to the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom while he is away for the day. Before we went to break, I was mentioning the U.S. dollar index, gold, as well as the GDX. Now, instead of the GDX, I've got the NUGT, the direction shares, the bull 300% out here. That's the top portion of my screen. The center portion of my screen is the gold contract. It's a continuous contract. The bottom is the U.S. dollar index. Now, I've inverted the U.S. dollar index because of the directional correlation that it has to gold. Meaning when we see the line moving down, it's actually the U.S. dollar index getting stronger, because as the U.S. dollar index gets stronger, gold should be moving and following suit with it and should also be pulling back. Now, there are some brief periods of time where the correlation gets unhinged. I was just simply going back, and that's why it's so nice to be able to look at it like this, because, you know, we're all visual. It's all really about being visual and being able to, that's how we learn best. And so placing patterns on stock charts is so important. Now, if we take a look at the U.S. dollar index back here, it looks like between about December 18th of 2013 through about January 30th of 2014 out here, we actually saw the U.S. dollar index make lower lows. And then it went ahead and now that meant it was getting stronger. Then it started to weaken by making these higher highs. Remember, it's inverted out here. We saw gold actually. Gold had formed a bottom in the December timeframe, 2013. Kind of interesting because we're talking about bottoms, okay? So just to see how this pattern works here, that's really interesting. We actually saw gold move higher, and we saw the U.S. dollar index get stronger. So there was that disconnect. Then finally, the U.S. dollar index got back in line, and gold continued moving topside. Now, here's a second correlation time period. How wild is that? And this is at June, because gold went ahead, made a secondary loan back in June out here. And we can see here gold was moving higher with the U.S. dollar index getting stronger by moving lower. And now we've got a third time is the charm, baby, right? Here we've got gold moving higher, and we clearly have the U.S. dollar index, which has been getting stronger. So in this case here, we take a look at the correlation chart. It's actually been moving lower to, it's been moving, it's been, you know, and this correlation chart, it's been moving lower. So there are some time periods, but those time periods don't last forever. So, you know, you can stay at the party, you can drink, but eventually you're going to get a hangover. And, you know, if the U.S. dollar index then starts to get back in line, which is really what the large commercial traders are saying. By the way, during the break, I was able to take a look at their net short position. I couldn't update the chart here, and it did tick up just slightly. Silver, on the other hand, which has been weaker than gold, if we take a look at the CFTC data, I did not update it, but I can tell you they are at basically the exact same, they, being the large commercial traders, the exact same less net short position. What that means is they're very close to however you could interpret their data as actually being long out here. So silver, which has been weaker than gold, they haven't budged one iota. They haven't budged one iota through this past Tuesday out here. So the metals clearly making a bottom. They're going to need the U.S. dollar index to eventually participate out here, but it's not the be-all to end-all. If we take a look at some of the mining equities, see what they've actually done today in light of the big move in the U.S. dollar index. If we take a look at Rand Gold, it's up a quarter out here. We'll look at a couple that are up and down, see what Rand Gold has done. Ticker symbol GOLD. What this has done is it's really just stalled at the 0.382 retracement level. Volume inside the move today is 972,000 shares. That was going into 1.5 million from 2 days ago. This candle here that you're looking at, it's not a bearish candle. It's only red. It just means the price opened up at the top and it's traded down here to the low. So no bearish reversal signal inside of Randgold, just simply dealing with its 0.382 retracement level. We take a look at Gold Corp, the number one percentage holding inside of the GDX. It's at 2142. That is your resistance level out here. Now you've got resistance at that gap down. That's at the low of October 29th. Key level to be watching is 2142. If and when Gold Corp, and I suspect it is, when Gold Corp takes out, you can see Gold Corp here is making what? It's making higher lows all the way up here. So you can see this just little slight change in trend out here. When and if gold moves above 2142, that's when you'll see the XAU and the GDX really get moving out there. You also need Barrick Gold to chime in. Barrick Gold basically flat today. We take a look at it. No reversal signal today or anything inside of Barrick Gold. It's dealing with its trading session from October 29th. That's got 15 million shares. The following one with 26 million shares. Just really also, though, making some higher lows out there. So you can just see how all this stuff is teetering and trying to get through. Now, let's go take a look at the summation index out here, because earlier in the day, actually saw the NDX move to a slightly negative level out here. And in the summation index, I want to take a look at the composites. I want to make sure everything is still above the zero line when we take a look at its price oscillator. And inside the NDX, it's above zero. It's close. And we're coming in, and we got about 3 or 4 minutes to go left in the trading session. Looks like the bulls have resumed control. Not a bearish reversal signal, but there are things that we have to be paying attention to. And one of those things you want to be paying attention to is the VIX index. In fact, if we take a look at what the VIX index is doing, VIX index, I believe, is up just slightly. Is it not? Let's see. I'm sorry. It's back now 44 cents out here. It's at 13.14 out there. It was up earlier in the day, even with the market being up. It's something to pay attention to. Now, the real key level to be paying attention to inside the VIX, it's still making a little bit of a rising bottoms pattern out here. Let me see. Is this trading inside this swing point? It sure is. So the key level to be watching, let me, this is the actual VIX out here. Let me actually get my, the data window's out there. Okay, great. So the key level we want to be watching come Monday inside the VIX is going to be 1238. Because what you want to see, as the markets have been making higher highs, you want to see the VIX start to make some lower lows out there. And we haven't seen that. The VIX here has still been making kind of a rising bottoms pattern out here. We're certainly well above the November 10th level. When we take a look at price inside the market out here, we are not below the November 10th level inside of the VIX. So between the Euro, Japanese yen, between the VIX, those are really the only real, well, those aren't the only cautionary signs out here. The other cautionary signs really are the one big one, if I can pull it up on my screen out here real quick, is really the high income yield fund out there. HIO is one of the ones that I like to use. Come on, pop up on my screen for me. I think this has gotten just a bit, you know what, as long as I'm out here. Come on, where are you? Where are you? I'm not going to find it. It's too messy. But I want to take a look at the equal weighted stock. So the top portion of this is the S&P 500 equal weighted. Bottom portion is the regular SPY. They're both making higher highs. No problems under the covers. Folks, have a fantastic weekend. Fabulous Friday. I look forward to seeing you tomorrow. Get over to the homepage at TFNN.com. It's going to be an extraordinary 7 weeks, and I'd like you to be a part of it. Have a great weekend. Look forward to seeing you tomorrow morning, 9 o'clock sharp, or 9 o'clock sharp Monday morning when we have the Trader's Edge show. Have a great weekend, folks. Look forward to seeing you soon.
And welcome, folks. It's another beautiful day at the headquarters of Technical Trading and Investing, TFNN.com. I am sitting in for the one and only Tom O'Brien, although I do sit in here on most Friday afternoons where we talk technology, and we'll be doing that. Of course, if you just got in your cars, you want to know what this market was doing, and we had a little bit of rock and roll. and that was up almost 20 points or so earlier in the day on the S&P cash, up at 1075 at the close. At 2063.50. Of course, the NASDAQ was up 11, and the Dow Jones up 91. Kind of the bigger ones of those. So it is an interesting day, and we'll be talking a little bit more about that. But to me, probably the most interesting thing is that we had a lot of volume for options expiration. It is rare that we get anything like we got. If you listen to this show a lot, you'll hear Tom O'Brien talk about the floor traded volume, that is shares traded on the floor of the New York Stock Exchange, which is about maybe 25% of what actually is traded on electronic commerce networks. But certainly what you would see is a great deal more volume, although as long as you compare apples and oranges, either floor traded or the total New York Stock Exchange consolidated tape, which includes the Amex too, if you actually put that together with the NASDAQ, that is the total shares traded. Anyway, 3.8 billion shares, most, I would say probably out of the last 10 expiration days, we were probably at best about 3.2 billion shares. This one was a very, very well-attended show today, at least for stock volume, which tells you that a lot of people were getting their positions all lined up. Of course, options expiration normally means that the next 2 days after it is options rollover. In those 2 days, you have to really start looking at a lot of volatility. The problem is we don't have time for that in next week. You're going to have probably some decent volatility and volume on Monday. Tuesday, you're going to start seeing volume go light, and Wednesday, of course, very infinitesimal volume. And you just need to know that you've got about 1 day of big volatility left. And if you are short a stock, it's going to be a very tough. The old saying, the old chestnut on Wall Street is always, don't be short a quiet market. And I think this morning's open was exactly that. We've had a quiet market. I think I could have heard the crickets all during the week. A few stocks had some Roman candles and some fireworks, but for the most part, a slow, steady stumble up. And I suspect we're probably going to see that into the end of the year. But I digress, as I often do. We're going to be getting into a great deal of technology in this hour. Before we get into that, I did want to welcome Andy Heck. Andy has his own show for commodities, and I noticed that most days people like to check in with Tom O'Brien for what gold and silver and platinum did. So we're going to go to Andy today. How you doing, Andy?
I'm doing great. Dave, how are you?
Pretty good. So let's take the core temperature of gold, silver, and platinum and the metals today.
I hope I can be as eloquent as you, sir. So I will start by saying, first of all, in the world of commodities today, the dollar made a new high. And actually, if you look at the daily dollar index chart, kind of a key reversal there. So, you know, that's where it all starts with commodities. But some real divergences out there, David. Gold was actually, you know, on a day that the dollar index is up 738 points, you'd think that gold would be down, but that's not the case. We're up about $10 at the moment. We're trading about $1,200.50 an ounce. So some strength there in the gold. We actually got up to a new high today, new, I guess, multi-week high, about 1207. Silver also showing strength, up 30 cents today. Platinum showing strength. I think that gold is really kind of waiting for the Swiss referendum, and there's an implied put under the gold market until that's over. But divergence is all over the place. The dollar's strong, and commodities are across the board pretty strong today. We're seeing even oil. Even oil's up.
Oil. I guess the big thing on that is that referendum on the 30th? Is that right, on November?
There's a couple of key dates here. The referendum for the Swiss is on the 30th of this month, so we don't have long to wait, 9 days. And the OPEC meeting for oil is on the 27th of this month.
So Thanksgiving. So both of those days we're going to be closed, and it's going to give us probably maybe a little pop up or down coming back from those markets being closed.
Yes, potential gaps.
So when we look at the dollar index, it was up 69 cents today at 88.28 for the close. A pretty big, I mean, it closed, about a dime short of its high out here today. It still looks like we're in this upper trading range. I'm kind of looking for it to stay probably around this area to maybe up to 92 over the next couple of months before it peaks out. I don't know where you're looking at the dollar index or the strength.
I agree, Dave. I mean, I have to say that the trend in the dollar has been nice, really, really nice and really sharp. And there's some really key long-term resistance above here. And I do think we can get to 92 in the next couple. Maybe if we break through some resistance, maybe we can run there pretty quickly. But over the longer term, given what's going on in Europe, given what's going on in China, given what's going on around the world, I see dollar-euro parity.
Yeah. Normally I know you don't spend a lot of time with equities, but I listen to a great deal of the earnings reports, and I've been waiting for one thing, and that is starting to hear stocks that earnings missed being blamed on the dollar. And
that's coming, and there's something else that I'm waiting to hear. Perhaps we'll hear that when the dollar hits some of these upper resistance levels, is central bank intervention to slow down the ascent of the dollar.
Well, I was going to say, I heard the first one on Wednesday, and that was Salesforce, the big cloud services company. So we have heard the first one, and a lot of them that have missed haven't blamed the dollar index yet. Most of these companies hedge out 3-6 months in the future. So it doesn't immediately affect them. It does affect them over time, though, because, of course, after the cows left the barn, it's hard to hedge. And
absolutely.
So you get that 3 or 6 months pop. Now they'll try to work out the rest of it. So, I've always looked at the model at about 30% of the S&P earnings is because the incredibly low interest rate. But another big part of that has been the incredibly weak dollar for these multinationals. Now, for the price of gold, unless you go out with one of these guys that is, I'm shorting the yen and going long Texas French fries, and then a bank shot off the 9 ball down on some off somebody's house, or all the extremely convoluted ways of pricing these things. Gold's in dollars, and I guess what you're saying today is for a dollar index up almost 0.8%. I should have seen major weakness in gold if it was going to be going down in the near future, right?
That's absolutely. I mean, you should have seen. That's a big move in the dollar for a currency. Maybe not for a stock, maybe not for a commodity, but for a currency, absolutely. Today's a big day, and you should have seen a knock-on effect across commodities, and you didn't. And gold is really, very strong. But we have to remember we're coming through a weak period in gold where we bounced off 1130, and gold is showing some strength here. It really is. It's I'm looking at today as kind of a divergence day because very, very strong dollar and commodities up across the board, but it is a surprise. And one thing to note about gold and silver, third Friday in a row, Fridays are becoming the favorite day for the gold market, silver and platinum, because if you look back, the last 2 Fridays, the 7th and the 14th, were key reversal days in gold, silver, and platinum.
Do you think
we're seeing some real strength going into weekends?
Don't you think that that's just a change from people tired of getting beat up by buying oil as the hedge for the weekend and coming in and seeing it much lower?
Like a baby seal on an ice floe.
That's what it's like there. Hey, Andy, I want to thank you for the call in. You and Tom go have some fun in Sin City tonight.
Have a great weekend, David.
Thanks for the call and catching us up. We're going to get back to technology here in the next segment. If you have a broad question, you can give me a call at 877-927-6648 about technology. But we're going to get into the best deal of the year, I think. Hang on.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN
Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This is Dave White sitting in for the one and only Tom O'Brien. Of course, I don't know if he's sitting in so much as taking over the show this week because Tom is out at the trade show for finance in Las Vegas with our good friend Andy Heck, and a well-deserved break. What we are doing here at TFNN this afternoon is talking about one of our other good friends here, Steve Rhodes. He has his 7-week trading program starting tomorrow, and just a friendly reminder to go to the front page of TFNN and click on that little icon that talks about the 7-week trading program and register today because it starts tomorrow. Other things of interest going on out here, just was going to catch up on tech stocks because that's what I do here at TFNN. Intel was a little higher out here. We're going to talk about that. Now, of course, being expiration day, you get a lot of games, upgrades and downgrades trying to push stock prices around. Intel did kind of pop up here. I'm not thinking this thing really takes a big run before the end of the year, but I don't think it's headed down either. Microsoft had a little bit more action out here. I suspect that had a lot more to do with option market maker positions, and they wanted this thing to close out around $48 today. In fact, Steve Rhodes asked me about Microsoft and Intel, I think yesterday or the day before. My opinion has not changed on that. Both Intel is really working hard, and we'll talk about that in just a second, to get in on the very low end of the market. Microsoft itself is working very hard to get some new income streams from their Office suite. And a big thing is that they've really figured out a way to tap in on upgrades cycles. And, of course, for probably the last 2 years, if you've listened to the show, we talked about the impending Windows XP upgrade cycle. Of course, mid-January, you start with Vista. Vista support is being dropped, so they're going to try to start moving people up to Windows 8, 8.1. And, of course, in spring, we have Windows 10. They're actually skipping Windows 9. I've got pre-release copies of Windows 10. It solves most of the, I would say, horrible parts of Windows 8. But there's some nagging things. You want to get that start menu back. But anyway, pretty much starting probably March, April, May, we're already going to have Windows 10 out. So mostly what we saw throughout the 80s and 90s is the way Microsoft's getting back. And that is a Japanese principle that basically Mr. Gates started with and liked for management. And that was what the Japanese have a word for it. But I'll just tell you the English translation. Constant and never-ending improvement. So we're going to go back to cycles where operating systems last 2.5 years, and they are constantly upgrading them and updating them, both for security reasons and for new features as they come along. But I don't see anything a real big change in either one of these. Intel's margins may come down just a little bit because they are going into a great deal of small devices that are fairly inexpensive. I told you before the break we were going to say probably one of the best deals I've seen ever on a laptop, or not a laptop, but on a tablet. We were talking about cheap tablets and cheap laptops really coming out. Any device under $300, Microsoft is not going to charge their $40 to $60 license fee for, and we're seeing these on Microsoft's website today. And you might want to go to their website and check it out. In fact, if you need any links and you're in your car, you can email me at path@tfnn.com, and I'll try to get to you this weekend. Anyway, on the Microsoft's store website, there is a great deal, and it's an HP Stream 7 Signature Edition tablet for $99. It's got very good resolution, 1280 by 800, so you can watch movies on it. It's got an Intel processor in it, a gigabyte of memory, and 1 free year of Office 365 Personal, which is worth about $70 just in itself. So some of these deals, especially if you're looking for a stocking stuffer, one of the things I really like about my tablet that I bought last year was when you use Microsoft as the browser, it gives you the full version of the operating system, the full website instead of the mobile website. If I'm doing anything with like Spotify, I get the Windows desktop version of Spotify, which doesn't play ads continuously and lets you select the order you want to play. So there is some kind of interesting stuff about that. So we will get into that. Hang on just a second. And what else? Oh, I just wanted to say there are some great deals. We're going to get into some other ones, but even Amazon is starting its big sales today. But if you're looking for some cheap stuff, it is starting already, and we're going to be looking at a deluge of products coming out throughout probably the next 10 days. In fact, we're going to get into Amazon a little bit, so I will save that for a little bit. But if you want a cheap tablet that runs a full version of Windows for $100 with high resolution, runs 4 or 5 hours on one charge, so probably not the best, but HP, Windows 8, a 32-bit version of it, pretty much everything that you're looking for. Of course, a lot of discussion this week on net neutrality. I'm not really thinking that we're going to see a great deal of change anytime soon on this. With the new Congress probably going to be brought up at least a little bit. But you do have, I would say, probably a consensus slowly starting to turn out here for a net neutrality, and probably also for forcing that. I haven't seen the kind of moves that you would think you would see in Time Warner and Comcast, but especially with people like AT&T making comments like they're not going to do a thing until people talk about no more net neutrality. I'm guessing that that's going to go through. I think if there was one thing the new Congress and the President are going to agree on in the first 3 or 6 months of next year is basically taking these companies and turning them into public utilities for giving us Internet access. There's just too many shenanigans going on out there. Now, one of the other things going on out here, I wanted to get back to it because it's up here in the, where's it at here? I can't find it now. But one of the other things I did want to bring up is that, of course, Reed Hastings, the head of Netflix, is inviting everybody that is big in any media to talk about the future of media and how they should be communicating that to our politicians. That's going to happen, I believe, on the 17th of December. And it's going to be quite the shindig if you know Reed Hastings. But it looks to me, at least some of these folks, certainly people like HBO and others that are really getting in on this part of the market. Oh, here it is, Digital Summit. Reed Hastings wants to talk about the future of TV. He's asking people who run movie studios, TV networks, and entertainment conglomerates to join him for a private chat. So we won't see any TVs there, but it's going to be at a Utah resort next month, invitation only. So I guess I'm not going. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back in, this is Dave White sitting in for Tom O'Brien. Normally I'm with him. If you are just climbing into your cars, the S&P closed up 10, the NASDAQ up 11, and the Dow Jones up 91 on very strong volume. Of course, overnight we had the Chinese getting into lowering interest rates, and the Europeans out there buying some stuff, buying some bonds, getting into their own QE. As we talk technology, of course, it's heading toward Christmas. And, of course, Walmart a couple of weeks ago decided to match online prices, including stores like Amazon. Some people figured that out, set up some phony stores on Amazon, and basically had Amazon match those phony prices. That lasted for a week, but many people were getting PS4s for about $150, but they shut the door on that yesterday. But it lasted about a week, became kind of an internet sensation on how to scam Walmart. I'm curious of whether or not those people that bought that are going to get service and support long-term, or Walmart's just going to eat it. I don't know how many of those went out the door, but I know it did become kind of a deal, and people bragged about it on social media. They may find the long arm of the law knocking on their door because of that. Cord cutting is basically in full effect. We were talking about PS4s, but of course Microsoft's got their own Xbox One, as one of the first signs of HBO splitting from the cable community. HBO Go now is on Microsoft. It beat PlayStation 4 to the punch on this one and some of the other stuff. But we're starting to see probably those first drop, drip, drip, drip of some of these content creators thinking that they can't wait any longer. They have to get off of it. Now, HBO has the most pirated show with, not House of Cards, what's the other one? Game of Thrones. Game of Thrones is what I'm thinking of. And it is, no, but if you had Xbox, somebody in the den says, I can't see anybody switching to Xbox just to get HBO. But if you were thinking about maybe getting one or the other, maybe that would be something that would interest you. Anyway, Microsoft beat them to the punch. And, of course, even then, Microsoft's got some interesting bundles. They've also, of course, already gotten rid, well, not gotten rid of it, but de-linked buying the Kinetic product to it. So the prices are now the same. Plus, they're putting some big bundles together with some games and aggressively going after that market. So the PS4 and the Xbox One probably going to go pretty much head-to-head this Christmas once again in the Game Box Wars. Amazon, not to be denied, has started Black Friday today. There are a bunch of sales already on their site if you go home tonight. One of those, which I think is very interesting, I had a friend's son who's very interested in getting into the getting a brand new laptop, and he's been talking to me about the last 2 weeks about getting one. I had to email him when I saw this morning, and that is that Amazon has a great deal of tablets and laptops today off 20%. They're going to be running sales starting today through next Saturday. And then they're going to have yet another thing after, I think probably about the 1st of December for their own sales that normally called, well, I'm a little stumped here, trying to think what the... Cyber Monday, that's what they're going to do. They're going to do a Cyber Week instead of just a Cyber Monday. So it's going to be absolutely huge. But they are starting very early and very often. Like I said, some huge deals already hitting. Now, if you need a TV, you probably want to go to Amazon tonight because they have a bunch of probably older TVs, probably 6 months, 9 months, not the latest greatest versions, but I thought I saw 55-inch TVs with full 1080p and most of the features, just a little older for incredible prices. So probably want to check out Amazon when you get home tonight if you are looking for presents because the deals have already started. We talked about the Digital Summit. This week, a lot of the people with GoGo had their feet, and United's Airlines CEO also, basically their feet put in the fire. Walt Mossberg, the executive editor of Recode, basically saying what a lot of people already know, and that is the idea of having Internet access is great on cross-country flights. The downside, it has become incredibly poor in service. Sometimes it lasts 10 minutes. Sometimes it lasts an hour. But very few people that pay $25 to get cross-country Wi-Fi access are actually getting it. Finding and trying to get refunds when it does not work is problematic. But when you get to the people that actually design this hardware and the guys in the airlines, they're basically saying, and quote, it's going to take a little bit more time to get to the next level of technology. It's not like putting together a router at Starbucks, but it's coming. So if you're on an airline, like I'm going to be on Wednesday, maybe I won't pay that $25 to get access for 2.5 hours while I'm in the air. But interesting. Of course, one of the other big things happening this week is huge auctions for spectrums. They've been going on through this week. Of course, anytime you're talking about delivering internet or cell phones or smartphone data, it's all about getting that spectrum data. a lot of those UHF television stations and the VHF television stations are losing their license right now. And, of course, the FCC is auctioning off this week already. On Wednesday, $24.1 billion worth of spectrum was auctioned off to these folks. And, of course, once someone owns it, it is kind of like having a bit of a fiefdom. The high prices, of course, or the highest prices, came in New York City and Los Angeles and other metro areas, but a great deal is those cities. But in 2016, even more valuable airwaves will be up for sale as some of those licenses expired as we went to HDTV, and the old VHF and UHF channels are going away. Other things going on also in the tech sector today. Amnesty International, the Electronic Frontier Foundation, and others have gotten together and written a tool that lets people see if the governments or their governments are surveilling their PCs. This new product is to fight back against repressive governments who are misusing spyware against society. Detect is the name of this program, DETEKT. It scans computers for traces of major spyware and sends alerts to the user if something is picked up. If an intrusion is found, it's reported to a specific emergency page online, so it lets the people at Amnesty International and the EFF know about it. And I guess we're starting to fight back. A few pitchforks out there with the farmers going after a government that probably going a little bit too much farther than it should, certainly beyond the scope of anything in the Constitution or in the courts. Anyway, it does log data to be used in investigations, and they're basically going to be using this to make sure that Big Brother is not all over us in the future. But if you're worried about that, as I am, check out DETEKT, and just wondering how long before the NSA and the CIA have many people in that office where it's written to try to circumvent it. Freemium, of course, if you've been watching the news, there's a great deal of, I wouldn't call it hysteria, but angst about many young children downloading games that they thought were free, only to find out that they have a giant bills coming out. The former leader of the Sex Pistols, his name was, he was known as Johnny Rotten. Actually, his real name's John Lennon. Was reported out here this week. He spent 10,000 pounds in the last 2 years on his iPad apps. And for, I guess the technical term that they are using in the industry is freemium. You get the app free, but if you want all these little addendums, they are there. But what it has changed is the way that these apps are marketed. Quietly disappearing this week off of Apple's App Store is any mention of any app being free. They just let's just get that little eraser and get rid of the word free off here. My guess is there are a lot of lawsuits coming their way for supposedly free apps that ended up not being free, and probably Justice Department looking at it too. We'll be back in a minute.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. And welcome back. This is Dave White sitting in for Tom O'Brien and doing the Tech Insider Hour as we normally do in this spot every Friday. Of course, I will not be here next week as we're closed. So it'll be 2 weeks before I see you back here with Tom O'Brien. So there'll be a lot of stuff happening in that time period. But I cover it every week in the Tech Insider. You can go to the front page of TFNN.com and check out newsletters and get a free 30-day trial to it. There is a lot of news out here, basically on security and webcams, other devices. The Internet of Things is really starting to heat up. But one of the things that was a big news story in England this week was that the Russians have basically done a concerted effort to find every webcam that is either not protected or mildly protected, where firewalls are not set up. One website on INSECAM, I guess it's NCCAM, it's the way it's pronounced, I'm unsure, listed 500 webcams and their addresses where you could dial basically in and see sleeping children, security cameras showing pensioners eating their lunch as well as offices, people sleeping in beds, living rooms, and a view of some pavement in some city in England. This is just a small set. Apparently, there's some other websites that are harder to find and listed in Russian that have thousands and thousands of these. One of the problems, of course, is using these small appliances is that they need to be behind a fairly decent firewall. And most people, you talk about firewalls, their eyes glass over like the Jaws shark when it's getting ready to bite somebody. They don't want to hear it and they don't want to know about it. It sounds complicated. But if you are going to use one of these devices, I'm going to tell you right now, from anything from using locks or, of course, thermostats in your home, if you don't want to come home and find out that it's as hot as the surface of the sun or as cold as the dark side of the moon, then you probably want to make sure that you either pay somebody or you learn about setting up a router and the firewall in that router correctly. But it is becoming I guess a sport, kind of a voyeuristic sport, being able to look into people's houses. But these websites seem to be popping up all over the place. In Europe, my guess is it's not long before they're going to show up here in the United States. One of the big news stories out this week is Sandvine's biannual report on what's going on in the Internet. I actually published the link to their PDF, but if you Google it, you should be able to find it. Probably the biggest news story that they've found out in the last 6 months is the rise of Amazon Video. We know that pretty much at night, you're going to find that Netflix is a monstrous, maybe 30% of all the traffic to 35% of all the traffic on the Internet in the world from just U.S. traffic. An amazing amount of people have cut the cord and are watching Netflix regularly every night. Amazon, of course, has their own video system, and it's been a thing where, well, you know, there's a few things out here on Amazon that I want to watch, that they have their own particular content that I want to see. But it's gone from a tick. It's not like it's burnt the entire city down, but they have gone from about 1% to 1.9% in 6 months. So not only are we seeing the cord cutters leave and go to Netflix, but it's starting to pick up in both Amazon and places like YouTube. We're going to see some more YouTube competitors come out here fairly shortly from other companies also. So the ability to get to audio and video like TFNN.com is going to be, I think, it is the wave of the future. You always wonder when that tipping point is, and the question is whether or not that tipping point is this year. Certainly looks like we are well down the bunny slope and looking for maybe some hills of a little stronger nerve to go down. Not double blacks just yet, but certainly look at some of these ski slopes and seeing that we're off the bunny slope, at least for Amazon and a lot of these other ones. And probably the creepiest news this week, researchers in North Carolina State University have developed a technology that allows cyborg crickets and cockroaches, disgusting, and turn them into cyborgs. Yes, they put a little circuit board on the back of these things and tied their little whiskers into a small circuit board and let these things loose in buildings that have fallen down. The natural impulse of the cricket and the cockroaches are to go to noise. And basically these things carry themselves closest to it. So if you're still alive under a buried building, but I don't know, the whole idea of putting a circuit board on the back of a cockroach, kind of creepy to me. And if you saw this picture that we're showing right now in the studio, basically you got a cricket a little bit bigger than a quarter with a little circuit board, maybe about the same size as the body on top of it, but able to get down there, find out where people are, and find them. So that's a good thing. I'm just wondering when 10,000 of these things, when one of my neighbors, I tick them off and they run these things, if they don't run them all over to my house one day. Because my guess is they could probably, if they can make these crickets think where a sound is coming from, they could probably drive the crickets there, couldn't they? A lot of people are not enjoying the cricket page here that I'm showing on Tiger TV. Well, we're coming into the home stretch out here, and I always like to either come up with a web page of the week or a new app that I think is tremendously well above the average. In the last week or so, I've been using a new app. It's the third generation of Flipboard. This is an app to let you basically view a lot of different news feeds. A lot of people think RSS is kind of what you're stuck with for news feeds. I probably have about 75 different news feeds that I look at throughout the week before I write my Tech Insider every week. But your interest may vary. Anyway, Flipboard is one of these apps that basically congeals all the news that you want to get. You go to kind of a little menu out there and you select all the things you're interested in, and then it makes a wonderful experience for you to read them. Anyway, check out Flipboard. It's on all the major players, Windows, Google, BlackBerry, just about everything. But very neat. I'm using it. I love it. Anyway, go to the front page of TFNN, check out newsletters for the Tech Insider, and we'll see you next week. Remember to sell when you can, not when you have to.